Alrighty, hello everyone and welcome. My name is Jilliana. I'm the customer relationship lead here at RightCapital. Happy Friday, and thank you for joining us today for our session on paying Roth conversion taxes in RightCapital. This is one of the most important and often overlooked decisions in a Roth conversion strategy, and of course, that is how the taxes are paid. Should the clients use the converted funds themselves, or should they pay the taxes from outside accounts? That choice can have a meaningful impact on long-term retirement outcomes, and it is critical that advisors can model, compare, and clearly communicate those trade-offs. In today's webinar, we will walk through a practical study focused on exactly that. We're going to cover how to build and compare Roth conversion tax proposals, and we'll do that all within our tax module. We'll also talk about some key considerations for evaluating Roth conversion opportunities. Now, every client has a different situation, so we will talk about the main areas to consider when we are talking through a Roth conversion scenario with a client. And then we'll also talk about some best practices for just modeling within the software, some tips and tricks, and presenting strategies in a way that resonates best with our clients. We're going to start with a brief overview of the module. So for anybody who's unfamiliar with the tax strategies module, we'll give you a nice overview to get you up to speed. And then we'll dive into building out two different strategies within our strategies tab. One where we're going to model one strategy without tax withholding. We're then going to model a second strategy with tax withholding, and I'll showcase a newer update in the system that allows us to model withholding taxes with our conversions. It's a really exciting update. A lot of our advisors have passed along feedback to get that update in the system, so we'll talk through that today as well. And then from there, we'll tie our results back to the retirement analysis tab and we'll review a side-by-side comparison. And then I'll also talk about how to generate a client-ready report so we can illustrate the differences clearly and confidently. Before we get started, just a quick housekeeping note. This session is being recorded and you will receive a copy of the recording after the webinar. The webinar is always also going to be included in our webinar recordings page within our Help Center, and I will plug how to access our Help Center as well as our support team after the webinar is complete today, or at the very end of the webinar today, I should say. And then, of course, if any questions come up along the way, there is a Q&A box down below, so feel free to drop any questions in there, and then I'll make time at the end of the session today to answer any questions you might have. This webinar is going to contain about 35 to 40 minutes of content, and then we'll have some time for Q&A, ideally wrapping up before the top of the hour at 2 p.m. Eastern time today. So with all that being said, let us dive into this client plan here. We're going to be working with Allison and Frederick Whitmore. We can see their names displayed along the top here. And before we even go into any of the tax strategies modules, I just want to take you over to their profile blueprint tab. And the only reason I want to showcase this is just to show you exactly who we're working with. We can take a look within the blueprint module here just to see all of the data entry in the plan and really get you familiar with what items we're dealing with, just so when we're doing the modeling, everybody has a good idea of who exactly this plan is for. So if I scroll down here, we're looking at our overall net worth. There are two children in the plan. We have Allison and Frederick listed out respectively. Their overall net worth is just shy of 2 million. We have them at age 47 and 50. If we scroll down even more, we can see all of their accounts entered within the plan, and these are going to include assets and liabilities. So they have their 401k and traditional IRA accounts broken out by owner. Bank accounts, anything that's jointly held is displayed in the middle here. We can see they have a primary and a rental property, as well as mortgages, and then some additional loans like a car loan and a credit card here. So a pretty staple sample plan here with the necessities. And for anybody who's not familiar with the Blueprint tab, it is fully interactive. So if you are doing this live with the client, you can always click into any of these accounts here and make adjustments as needed. Maybe the bank account is a little bit more than is what's displayed. You can make that adjustment, hit save, and we'll see that reflected within the blueprint here. So a super great area within the software. Instead of going through all of the different tabs of the profile to overview a client plan, we can always just take a look at this blueprint to see it all in one page. We also have our goals tab here. This is going to be our goals board view. You might also be familiar with our timeline view, so you can see all of the goals entered within the plan. Our timeline view is going to show all the years as they progress with all of the goals entered within the plan. So if you have a lot of goals entered within retirement, within the profile goals tab, we can see things like their retirement, long-term care as we get to the later years of the plan, and of course, I scrolled past it, but we are planning for college for both of the children here. If you do want to get back to that board view, you'll just click on the goals title here, and that's going to bring you back to the other view. So there's two different ways to view the goals within the plan. It's up to you which one you like, but you can toggle back and forth to see all the goals entered within the system here. Let's see here. We also have our income, savings, and expenses tab. So this is going to be anything coming into the plan, Social Security. We have the savings and current contributions to the accounts, as well as expenses down at the bottom here. Excellent. This is also interactive, so you can make adjustments within this tab as well. So now that we have kind of a better idea of who we're looking at here, and I am seeing my Q&A box within my net worth. Thank you for pointing out this joint IRA. This is a sample plan. I must have entered this really quickly. We'll put this under Allison for now. Thank you for catching that. I do appreciate it. Fix that. That'll surely help our tax strategies down a moment here. So I appreciate it. Getting over a bit of a cold. So and my brain's a little bit all over the place. But now that we've got that sorted, thanks again for pointing out that joint IRA there. We'll fix that. Let me even fix the title. We'll switch it back to Allison. So that is all accurate. Thanks again, everybody. So we'll point that out. We'll get that fixed. And again, you can do it right from the blueprint tab. So showcasing, making these adjustments here if you do have something that you have to correct with your clients, we can do that right from this page. Anyway, that being said, I think I've gone over the blueprint enough. Let's dive into the meat and potatoes of today's webinar, and I'm going to take you over to our tax tab. Running Roth conversions and RightCapital specifically is going to be done under the tax strategies module. Here we have a series of 5 different tabs. I'll go through all of them, and they're all controlled by the action items down below with some visuals in our comparisons and our details tab here as well. Let's see here. Before we dive into the specific nuances within the module here, let's just talk about some major considerations that us as advisors should be thinking about when evaluating Roth conversions for clients. Firstly, we want to talk about our tax brackets, both today and in the future, right? A Roth conversion is ultimately a tax rate arbitrage decision. So we're intentionally choosing to recognize income today in exchange for tax-free growth later. So that means we need to evaluate the client's current marginal tax bracket, how much room they have before hitting the next tax bracket, and whether future income sources like Social Security, pensions, RMDs, or even business income could push them into higher brackets later on. The goal isn't always to convert as much as possible, but it is to convert strategically. The other thing to consider would be cash flow and liquidity, especially with how the taxes are being paid. Paying conversion taxes from outside assets generally preserves more money in the Roth to grow tax-free, but it only works if the client has sufficient liquidity and isn't compromising emergency reserves or short-term goals. Using withheld funds may feel easier, but it can also reduce the long-term benefit of the conversion, and this is one of the biggest trade-offs that we'll highlight in today's study. Another key consideration is our time horizon. Roth conversions tend to be more effective when clients have enough time for tax-free growth to offset the upfront tax cost. Age, health, planned retirement date, and even estate planning goals all matter here. So for clients who may fully never spend their assets down, the benefit may be less about retirement income and more about tax-efficient wealth transfer. We'll also want to talk about downstream tax impacts. Conversions can affect Medicare premiums through IRMA, taxation of Social Security, eligibility for credits or deductions, and even state taxes, depending on where the client lives now versus in retirement. A conversion might make sense in isolation, but modeling helps us understand the full ripple effect. And again, we'll go through all of this in just a moment. But finally, and most importantly, clarity and communication. Roth conversions can feel abstract to clients because the cost is immediate, but the benefit is long term. So we're really touching on that, sort of instant versus delayed gratification aspect here when we're talking about Roth conversions. So being able to show side by side scenarios and really quantify the impact on retirement success and clearly explaining the why behind the recommendation is what is really going to help build our confidence and our buy-in. So we'll talk about some helpful visuals as well to really showcase the benefit. With all that being said, we'll touch on all those key considerations as we're going through the module today. Let's talk through our brief overview, and then we'll actually build out some strategies here. Excellent. So when you do click onto the tax strategies page, we've all been staring at this summary tab. This is going to outline the summary of the strategy that we're proposing utilizing the action items down below. So the visuals here are going to show us a comparison in tax adjusted ending assets. The green visual is showing us our proposed strategy. So when we do look at the action items down below, the changes we make are going to impact the green bars. The reference strategy is just the strategy with no conversion. So it's comparing running the conversions versus the plan without running any conversions, all right? If we scroll down here, we have our action items. There are 3 major action items to consider when running a Roth conversion strategy. The first one is asset location. For anybody who's not familiar with asset location, this is a strategy that's not to be confused with asset allocation, but it essentially allows you to reallocate the client's equities between taxable, tax-deferred, and tax-free account buckets. So in other words, without actually changing a client's overall equity fixed income split, you can choose which accounts will house those equities and which accounts will house the fixed income asset classes, just to help clients obtain their preferential tax treatment on their investments. Right below that, we have our asset withdrawal strategy, and this is our withdrawal sequence. For anybody who's not familiar with that, with the withdrawal sequence, if the plan is falling into a cash flow deficit, meaning our outflows are higher than our inflows, the system is automatically going to pull funds from the retirement assets in the order of this withdrawal sequence in order to cover that cash flow deficit. So we have, by default, the system is going to pull from the taxable accounts first. Once that's fully depleted, we'll tap into tax deferred. And then once that's fully depleted, we'll tap into tax free. Now, that's the default order in RightCapital. You can propose different orders using the action item here down below as well. So if maybe we wanted to pull from the tax deferred accounts first, we could absolutely do that and knock taxable down to second in line. And then right below this, we have our Roth conversions. So within RightCapital, you have 3 different targets for your conversions. You can either target Medicare premium tax brackets, capital gains tax brackets, or ordinary income tax brackets. And a really great visual to help understand this action item is actually going to be up in the calibration tab here. So if I do click on the calibration tab, we're going to see a graph of the client's income, the taxable income, I should say, throughout the length of the plan. The blue shaded area is the adjusted taxable income without any conversions. The colored lines are going to be the tax brackets, so we can see exactly at which point in the plan where the clients are falling in relation to each tax bracket. This is going to be helpful when we're running conversions. For example, if we do want to maybe target doing a Roth conversion up front and just targeting that 35% tax bracket. If I do quickly here, just showcase what it looks like to, again, have my ordinary income target, fill up the tax bracket, and hit refresh on my screen here. We're going to see the green shaded area now is going to be our adjusted taxable income with that conversion. So we're going to see the green shaded area is going to fill up to that tax bracket without exceeding it. This is going to start as early as possible and then go until we've either fully depleted the tax deferred accounts or we're unable to convert further. So we're seeing that occur here just to show you very quickly what that action item is going to do for us. If I scroll down a little bit more here, we also have this estimated terminal tax rate. This is the tax rate that we are assuming the heirs are subject to upon the distribution of these assets. So if you are planning on wealth transfer and estate planning, and we happen to know what the terminal tax rate might be for the heirs, we could always plug that into the simulation as well, just to get it a little more accurate. So that's an option here too. On top of the calibration tab, now we can target our ordinary income tax bracket, but we also, if we happen to be targeting capital gains, we'll have that here. And let me just turn this off for now. When we go and build our strategy in a moment, we'll turn everything back on. But just to show you these visuals here, we are highlighting the capital gains tax brackets with the colored lines here, and then Medicare premiums as well. So depending on which target you're looking to select, we have graphs here to visually make it appealing for you and your clients. We also have our comparisons tab here showing some additional visuals, and we'll go into this in more detail, I think, once we do run the strategies, but there are a series of visuals here. So we'll build our strategy out and we'll come back to this, and same with the details tab. But let's go ahead and build out two strategies here. This is going to be the first strategy is going to be one strategy without withholding any taxes. So instead of paying with the funds from the tax deferred accounts, we're going to pay the taxes on the conversions from an outside source. All right. So this is how RightCapital has done conversions so far. And then after this, we'll talk about running that conversion with withholding. Alrighty, so let me go back to my summary tab here. And actually, what I'm going to do is show you our strategies tab. The strategies tab is going to be a great place to start with the tax module. This is going to showcase our solver tool here. So I'm going to click solve for top strategies. And what this is going to do is it's going to take the plan. It's going to run all the parameters and generate the top 5 tax-adjusted ending assets ending for the plan. In this case, it's going to be based off of the 3 action items that we have down below. This is going to be maximizing the tax-adjusted ending assets for the plan. I know we talked about how sometimes Roth conversion goals aren't always to maximize the tax-adjusted ending assets. Sometimes they're to maximize the wealth transfer to our heirs. So we don't have to take this as a set in stone. This is what the client should do. We don't have to take it as Bible, but it is a great place to start as the system is doing a lot of the heavy lifting for us, taking the calculation behind the scenes, generating the top 5 strategies to, again, maximize the tax-adjusted ending assets for this client plan. So we're going to use this as kind of our starting point today as a good baseline to just run our conversion strategy and see what the system shows us here. So when we are doing Roth conversions this way in the system, I'm going to take a look at my asset location strategy, and it's recommending that we take a taxable, tax-free, tax-deferred approach here. So I'm going to scroll down, find my asset location action item, and I'm just going to match the selection that it's recommending to me. Now you can select one of the top 5. You don't have to select the first one, but for today's purposes, I'm going to select the first one here. So taxable, tax-free, tax-deferred. And then our withdrawal strategy is taxable and then pro rata. So taxable will be tapped first, and then pro rata means that we're going to be pulling from the other account types, so tax deferred and tax free, equally proportionately. So we'll go ahead and select that one down there. And then for the Roth conversion strategy, it's actually recommending that we target the 22% ordinary income tax bracket. So I'm going to scroll down here. I'm going to use my fill up the tax bracket slider. So we're targeting our 22% tax bracket. And once I do make my selections, I'm going to hit refresh, and that's going to save my changes. Once I do that, I'm going to scroll back up to the top here and we can go to our summary tab. We can see in this case what's going to happen here. Our proposed strategy has adjusted those green bars, as I mentioned, and we have a difference in our tax adjusting assets, a difference in federal taxes paid, and a decrease in our withdrawals from tax deferred accounts. So a decrease on those RMDs, right? We can see high level info here on the right-hand side, showcasing those numbers as well. And then I also just want to show you the calibration tab. Let me go ahead and select our ordinary income tax brackets. That's what we're targeting. And just a tip, if we want to make this more visual, you can always check off the lines here to hide some of the lines that we're not utilizing. And this is going to expand the graph a little bit just so we can see a little bit more of what's going on behind the scenes here. So we can see the 22% tax bracket is this yellow line. So at any point in this plan, the system is recognizing when the clients fall under that tax bracket, it is maximizing the tax deferred assets and liquidating assets to run conversions to fill up to that tax bracket without exceeding it. This visual is one of the most powerful visuals to showcase what a Roth conversion is doing within RightCapital, and I love recommending this to be included in your PDF reports, which we'll talk about a little bit later when you are sending clients off with this information, just so they can better understand what exactly is going on. As we said, Roth conversions can be a little bit more abstract and hard to understand, so love this visual here within the calibration tab to showcase that. We also touched on our comparisons tab, so let's go back there and just showcase some of the other visuals available for you here when you are showcasing these strategies to your clients. The first one is just a very straightforward invested assets comparison. This is comparing the proposed strategy versus the reference strategy. And again, the reference strategy is just the strategy with no conversions here. If I click on the drop down, we can also look at the difference in federal taxes paid. So our proposed strategy is saving these clients over the length of the plan about $1 million in taxes, which is super compelling, right? Again, we talked about the instant gratification trade-off here with our clients, and they're going to have a cost up front with those taxes, but over the length of the plan, we're going to save a significant amount of money with that tax payment. We're also going to see a decrease in our required minimum distributions here. So with the reference strategy, we have quite a bit of RMDs. And then with our proposed strategy, we see that decreasing quite a bit here. We can also look at the difference in tax adjusted ending well. So if we do just leave it at the reference strategy, we have a large portion of tax deferred accounts within the plan and small tax free, but after running the conversions, we're seeing a nice visual here of all tax free. So again, just showcasing those tax buckets. We can also take a look at the withdrawals from accounts. So as we are utilizing the funds from our retirement accounts to cover costs throughout the plan, we're seeing, from where we're pulling those funds. And then we can also look at the balance of our accounts as well. So, of course, with our proposed strategy, we're seeing that tax-free balance increase substantially as we are depleting those tax-deferred assets by running these conversions. One other really helpful tab here is going to be the Details tab. And the Details tab is going to show us the conversion amount as well as the withdrawals from the specific account types, and we're tracking the account balances. So if you're curious behind the scenes, how much are we converting year over year to get the numbers that we see in the Summary tab? We're going to see here our conversion amount year over year and what this is showcasing in the plan here. Or every year we're running conversions, we're going to see this occur until our tax deferred accounts are fully depleted in this case. This is going to project for every year of the plan, so we can even track our withdrawals from the tax-free accounts and our tax-free account balance throughout the length of the plan. And this is running a straight line projection here based on the return assumptions within your settings. We also have tax details here, so we can see the adjusted taxable income every year, total federal taxes paid for that specific year, our federal income tax bracket that the client falls into, as well as the capital gains tax bracket. So we can see at any point if they're exceeding or below that 22% target that we selected. We're also looking at Medicare premiums. So Medicare premiums, if you are running Medicare premium targeted Roth conversions, we can see that occurring here. And for anybody who is maybe looking at this chart and they're not seeing Medicare premium calculations for their clients, there's a very specific item that we have to tick off within the client's profile tab to showcase Medicare premiums within the system here. So really quickly, I'm going to pivot just to show you where that is so that way you can see Medicare premiums entered within RightCapital. I'm going to go back to my profile tab here, and we're going to navigate to the Goals tab in our annual retirement healthcare costs. By default, when you create a RightCapital plan, your cost estimate field here for your healthcare costs is going to be set to a national average. This is a figure that we get from a Fidelity healthcare study that's anticipating the average healthcare cost for a retiree as of today. This is not going to inject any Medicare calculations into the system. So we want to make sure that we are using the detailed estimate selection here. And when I do select the detailed estimate, we get some additional control over pre-Medicare, out of pocket, as well as showcasing Medicare Part B and D as being estimated on AGI. So if you are, again, doing those Medicare premium targeted Roth conversions, you want to make sure you're selecting detailed estimate as your cost estimate option here. If I were to turn this off for the client, just to show you, we'll turn it off for Allison. I'll go back to my tax tab and just refresh the screen here. We're going to see within the Medicare premium calculation here that hers are completely turned off. That's because we set it to that national average instead of the detailed estimate. So making sure we're turning that on is really important if we're targeting those Medicare premium tax brackets. And then lastly here, if you are playing around with the asset location summary that we talked about earlier in that action item, we're going to see our overall portfolio equities, taxable account equities, tax deferred, and tax free. Anytime you're looking at one of these cash flow tables and the column headers are underlined, you'll click into them and you'll see here that we can get a breakdown of what exactly is making up the accounts within these columns here. Anything that's excluded from the asset location strategy, in this case, a specific nuance for RightCapital is that annuity and inherited IRA accounts are going to be excluded from our asset location strategy. Excellent. So this is one strategy that we have built out here that is just targeting our ordinary income tax bracket. We are not withholding taxes in this case. This is going to assume that the taxes are being paid from an outside account, whether that's the taxable account or available free cash flow, if that's something that the clients have within their plan. Let's build another strategy out here that's going to showcase how we can withhold the taxes so that way they're paid out from those tax deferred accounts instead of being paid from an outside source here. So when we are building multiple strategies in the tax strategies module, I'm going to scroll down to the bottom here and we'll take a look at this edit button. If I click on my edit button, we can see here there are some additional items and strategies that we can edit. If you are looking to run Roth conversions for a specific period of time, we do have two checkboxes here that allow you to specify when the conversions start and when they end. So you can check those off if you are curious on running conversions for a stipulated period of time. We also have this checkbox here. This is the new update where you can withhold the estimated taxes. So we're going to check this one off today because we're going to be utilizing this for our second strategy. And then I also want to highlight our edit strategies area down at the bottom here. Right now we have our initial strategy, which is our proposed strategy. And then you can also add additional strategies within the strategies module. So you don't have to run one conversion strategy at a time. You can have multiple and then toggle back and forth to see the impact between them. So I'm going to go ahead and you can either click add strategy here, or we can copy the existing strategy. For this webinar today, what I'm going to do is copy the existing strategy. Since we're going to be doing pretty much the same thing, but we're going to be withholding the taxes just to showcase an isolated instance with one area, or one strategy, I should say, withholding taxes and one strategy without. So in this case, I'm going to click on the three dots here and I'm going to rename this. And we're just going to call this, for simplicity's sake, withholding. Let's do two H's in here, withholding tax strategy. So we'll have the proposed strategy, which is the original strategy where we're not withholding taxes, and the second one, which is a copy of the proposed strategy with withholding. I'm going to select the X to save that title. I'm going to make sure this action item for withhold estimated taxes is checked off, and I'm going to click Save. Here now we have the action item available to us where we're withholding estimated taxes. We still have the proposed strategy selected, so I'm going to leave this as no. In order to switch to my strategy where I am withholding taxes, I'm going to check the down caret next to proposed strategy and switch to withholding tax strategy. Let me go ahead and just reselect that action item here. I didn't realize, but we do have to reselect that action item. So edit down below, withhold estimated taxes, and we'll hit save. So we'll just bring that action item back so it's not hiding from us. And then down at the bottom here, very straightforward, we're just going to switch this from no to yes. Let's take a look here before we hit enter. We have 9 million more in tax adjusted ending assets, about 1 million less in taxes paid, and 6 million less in withdrawals. So I'm going to go ahead and hit refresh here. Now we are withholding the taxes, and we are seeing still a benefit to the plan, but a little bit less in those tax adjusted ending assets, because instead of running the conversions and paying from outside sources, we are using the tax deferred accounts to pay down those taxes. So we are only able to convert a little bit less than we would be if we weren't paying the taxes out of the tax deferred account. So the results here are consistent with what we would expect. And we can see here that we have similar charts showcasing our ordinary income tax bracket, our comparisons tab with our different options here. And this is, again, withholding tax strategy. So the visuals are going to change depending on which item you have selected down below here. We also have the details tab. This is going to showcase those conversions amounts, of course, any withdrawals from accounts. So we're seeing the same visuals here, just with our different strategies selected within the action items down below. So pretty straightforward when it comes to building out those strategies. If you are utilizing the strategies tab as a guide to get you started, you can always make adjustments to the action items down below and change, what action items we want to adjust and see how that impacts the plan. And then in this case, we are, highlighting the difference in withholding those taxes. So we're withholding the taxes in our withholding tax strategy, and we're not withholding them within the proposed strategy. Now, one thing about the tax strategies module is this is fully isolated from the rest of the plan. So the changes that we're making here are not impacting anything else in the RightCapital system. If we do want to showcase what these strategies are going to look like in impact our probability of success over within the retirement analysis tab, we're going to toggle a couple of different action items over there. And in this case, we're going to create two different proposed plans so we can really show a side-by-side of a plan with conversions that aren't withholding and a plan with conversions that are withholding. So let's pop over to our retirement tab here. And we see here we have our proposed plan and our current plan. For anybody who's not familiar, our current plan is based off of everything under the profile tab, and our proposed plan is driven by the action items down below that allow us to make changes to our proposed plan to see the impact on our probability of success. So we have our proposed plan on the left-hand side here. And if I scroll down, I'm going to find my strategies on the side here. So in order to tell the system, hey, everything we did over in the tax strategies tab, I want you to take that strategy and bring it into my proposed plan and show me an impact on my probability of success. We're going to find where it says tax strategy, and we're going to switch it. In this case, we have our different strategies available to us. I'm going to just select the original proposed strategy. Again, that's not withholding taxes. And we're going to turn this on in our proposed plan. I'm going to go ahead and hit refresh down at the bottom here. And again, this is pulling everything we did over in the tax tab and impacting our proposed plan. So we can see our probability of success remain the same. This was already a pretty baseline strong plan to begin with, but we are seeing an impact on our median ending portfolio value, as well as a difference on this side here. So we're about, let's see, 4.3 to 6.9. So a bit of a significant increase here. And we can see that reflected within our confidence tab in our Monte Carlo. So if anybody's ever curious on where we're getting that median ending value from, that is our Monte Carlo simulation that's running the plan through 1,000 different trials. The percentage of trials that make it to the end of the planning horizon without running out of funds are considered a success. The median ending asset value that we are displaying in the green bar is directly representative of trial 500. So this middle deep blue line is trial 500, and we could track it all the way throughout the Monte Carlo. And if I hover my cursor over the very last year of the asset simulation graph here, that 6.9 million is the exact same 6.9 million we're seeing displayed here. Now, again, this is just one strategy that we built out in the strategies tab. So let's go ahead and do a side by side here and showcase our proposed plan without withholding. And we'll go ahead and create another plan showcasing withholding. So I'm going to click on my add or remove plans button here. This is going to allow me to add an additional proposed plan into RightCapital. I'm going to click add a new plan. In this case, we can change the title by clicking new plan. I'm just going to call this withholding Roth conversions plan for simplicity's sake, but you can always change the title to whatever is most convenient for you to keep track of. Make sure you're clicking the check next to it to save that title. We'll go ahead and hit OK. It's going to showcase now two drop downs where our proposed and current plan are. The plan that we want to manipulate needs to be selected on the left-hand side. So I'm going to select withholding Roth conversions on the left-hand side here. I'm going to scroll down and I'm going to find my tax strategy again. In this case, we're going to select the strategy that is withholding our taxes. I'm going to make that selection and I'm going to hit refresh. Now we can see in this case, we have a change in our probability of success. So it was able to bump us up a little bit into the 100%. And then we are seeing again that difference, 6.6 million versus 4.3. Now, if we wanted to do a side by side and just showcase the Monte Carlo for both Roth conversion strategies, we can select that original proposed plan on the right-hand side. And this is going to showcase side by side. This is what you're going to look like if you are going to run those Roth conversions and not withhold taxes from the tax deferred accounts. And this is what it's going to look like if we are going to withhold those taxes. So a really compelling side-by-side visual here for the clients. We have some additional helpful comparisons, visuals here available for you. Our comparisons tab is going to showcase invested assets. So we can see, depending on the plans we have selected on the right and left-hand side, the title of the chart is going to change. So with a withholding plan, has about $279,000 less the assets than the proposed plan. If we were to select the current plan on this side, and I go back to that same chart again, just to show you how these visuals change, we can see the current plan showcasing here as well. So again, depending on which visuals you have selected, oops, let me not select both of them on the same screen. That wouldn't be too helpful for comparisons now, would it? We can showcase the differences here. So when you are generating reports for your clients, you can really showcase the two plans that you want to highlight here. We're also looking at the difference in net worth. Taxes is another one. So we saw a very similar taxes graph between the two plans within the tax tab, but we have one here in retirement analysis as well. So that's going to take into account everything within the plan, not just an isolated event over in the tax module. And then we can also look at those assets at retirement. So not too much of a difference in the assets at retirement here, but compelling information nonetheless, just to give your clients the most ideal picture of what these plans are going to showcase. I will also indicate that we do have a today's dollars toggle down at the bottom here. So I have it turned on, but we can turn that off depending on, how visual our clients are. And if we do see large numbers, sometimes that can be a little overwhelming to our clients. So I always just like to point out that today's dollars toggle for our advisors as well. And then some other compelling visuals are those retirement details graphs here, so we can really show the income sources. Now again, for this chart, this is going to showcase the plan that's selected on the left-hand side. So I have withholding Roth conversions on the left-hand side. That's why this is the plan that's displayed on the chart. We can also look at the withdrawal rate, so we can see how this is going to change for the two different plans, depending on which one we have selected, of course. Retirement spending, income comparison, and a total spending comparison. So really super helpful visuals here that you can generate in a report. And then I also just want to showcase our cash flows tab as well, specifically the accounts tab within the cash flows. This is going to allow us to track the account balances We can also track the additions to the accounts. So when we are running those conversions, we can see the additions to our Roth IRAs. I'll go ahead and click into that underlying column to really break out, where we are contributing those accounts to. And Allison has the higher Roth balance, so her accounts are being targeted more in this case, as we saw within our Blueprint tab. We also can see the required minimum distributions, and as these clients hit age 75, we can see these coming out, and these are probably going to be smaller balances than if we were just to have them in the current plan. So to showcase a difference here, we can see much higher RMDs if we didn't do conversions, we are not doing any in the current plan, which is why these values are so much higher. We can even see what they look like within the other plan as well here. We're also looking at withdrawals from accounts. So this is going to showcase different than the RMDs. We break out RMDs and withdrawals. Withdrawals are just going to help us cover any sort of cash flow deficit. So you just are able to better recognize, what is a true RMD that is required by the government and what is a just a withdrawal to cover a cash flow deficit. And then lastly, here we have our net cash flows, just showcasing the full movement of money between all of the accounts. So additions and withdrawals and RMDs all in one area here. Really compelling visual, again, just to show the movement of the account funds into the Roth IRA when we're doing the conversions, as well as tracking those account balances. Now, we have gone ahead and modeled two strategies here. We've taken a look at some really helpful visuals, and we've done a side-by-side comparison here. Let's quickly just go over how to run a report for this as well. So when you are sending your clients off, they know they have a nice visual paperwork available for them, whether you send it to them via email or print it out, they'll have some takeaways from your meeting. So if you're going to generate a report in RightCapital, you're going to click on the gear icon, report. I'm going to scroll down here and I'm going to find my retirement tab. So we talked about retirement analysis. We have multiple plans in here, so you'll notice analysis is underlined. I'm going to click into the underlined area here. That's going to give me more options to select what I want to include in my report. You saw there were a lot of tabs in analysis, a lot of visuals, so we can pick and choose so our reports aren't too long. In this case, I'm going to select probability just for simplicity's sake. And then down at the bottom here, we have our select plans toggle. You click on this toggle here, it's going to allow you to select which plans you want to include in the report. So we can not only have a side-by-side analysis within retirement analysis, which is only going to showcase 2 plans side by side. You can showcase 3 or more within the report itself. So you do have a little more freedom to include more plans within the report if you do so choose. I'll click done here. And then you also have the ability to include the cash flow tables that we looked at. We looked at all of those accounts tabs, and you can select the plans here. You can also select specific years in the cash flow. So if you do want to select maybe a custom number of years, maybe you elected to do conversions in a very specific number of years, we're going to have the ability for you to select specific years of the cash flows. Previously, you would have to generate every single year of the cash flows, which could have been a little overwhelming. So this has been a really nice update to showcase, specific years within the plan. And then lastly here, you can include the tax strategies module. I always love including the calibration tab with that ordinary income tax bracket. We'll go ahead and select that one, and that's going to select generate a report of the one that is selected within the module itself. So I'll go ahead and hit done here. And you can include other items, for example, like the blueprint within your report. And once you do select those, you can click download selected pages. That's going to download the report as a PDF to your computer. And once you do download it as a PDF to your computer, we can see here the visuals available for us. And there is that, 3-way kind of side-by-side comparison versus doing no conversions, doing conversions without withholding, and doing conversions with withholding. So we can really showcase a side-by-side here. You can include multiple different plans depending on how many different strategies you're running. And we only did 2 today, but a lot of client plans with specific scenarios can have some wiggle room for a lot of different options. So you can include those all here for your clients as well.